We're back. Joining us now is Austin King. He's a managing partner in Newport Beach Investment Group. Austin, good to see you again.
Thanks, Don. Glad to be here.
And we talked to you late last year about financing companies, which is something that you do, but it's become a more challenging economy. What are you seeing these days?
Well, obviously, the interest rates are going up. I just checked the Federal Reserve is coming out with a decision today, and actually, about 40 minutes from now, that's going to have an impact on the financing abilities companies. However, we're kind of interestingly not seeing too big of a difference in the amount of fundraising or investments that we're seeing or arranging. Perhaps that's because we work with more sophisticated investors. However, your average investor, your high net worth investor, might have a different take because their 401k or deferred account is halved and they're not feeling as rich, or they invested in a lot of crypto, they don't have a lot more disposable income. So those are all factors you have to consider.
Absolutely right. Now, you get guys like Jeff Bezos telling you to hang on to your money. Are you seeing that attitude with the investors you work with?
Not particularly. That's potentially because they're professional investors, the majority of them, and that's their job. Rain, sleet, or or snow. Like the mail, it's always going to come, and they're looking for investments. The terms might be slightly different because now you have this, increased interest rate environment. However, the investments are still happening now. The companies that are seeking investments, therein lies the biggest differentiator today. And let me explain that. Because during the easy money period, companies kind of got lazy. They were more focused on raising money to do things like pay salaries, maybe invest in pet projects. What we're seeing now is a return to fundamental management, revenue generation, so that either means increasing your margins, cutting SG&A, doing what works out there, and not investing in things that may or may not work. Basically tightening your belt.
We were talking earlier in the program about mergers and acquisitions as a way to grow companies. Are you seeing more of that go on?
Absolutely. I think that's a great idea. Why not buy your competitor, especially when their prices are relatively much lower, or maybe they're struggling. The idea for the companies out there today, my best advice I can give you is look inward. Be creative, go to your network, do things like work on your internet presence with search engine optimization, do all these things, build your due diligence file, do all the fundamental management that you may have potentially neglected in lieu of raising that next dollar. Adjust your pro forma. A big piece of advice as I was thinking about this interview is adjust your pro forma so your base case is something that you can beat, versus your base case, you miss your base case, and that doesn't look so good. If you beat your base case, that looks great, even though it might be the same number. So these are simple things that you can do to make yourself look relatively more attractive in the marketplace today.
Would you say that's the biggest mistake that people looking for money come to you with, is that they just get a little bit lazy?
I do. I think that there needs to be, everybody wants to go to step Z or raise the money. Well, I give the example I give, it's like painting a classic car. The actual paint part could be the shortest part of the job. The sanding, the masking, the prep work, that is where all the work comes in. Same thing applies to your company. You need to get out there and look inward, build your files, build up, create that picture, build your documents. Every investment is based on documents, unless you're going down to your neighborhood watering hole and talking to Jeff, your long-term contact. And those days are not as prevalent as they once were. So you have to be more shrewd, sophisticated, outlast your competitor, and position yourself better in the marketplace. Increase your run rate, reduce your burn rate, things like that.
Now, I know you're always 3 steps ahead of the market, Austin. What's your projection for the rest of the year?
It's interesting. We're waiting for, as I mentioned before, we're waiting for this Fed decision to come out in 35 minutes. They're going to start their broadcast. If they go up by 50 basis points, I think you could see a sharper turn down. I think, that, or if they go for a quarter basis point, you might see a rally. Well, we've seen the strongest January in a couple of years. So that puts pressure on the Fed to kind of restrain it. It might be premature. It might not. We're just going to have to wait and see.
Newport Beach Investment Group, Austin King. Austin, your insight's always valuable. Thanks for joining us.
Thanks, Don. Appreciate it. Have a good day.